Okay, Bitget team, welcome back to the channel. Thanks for tuning into today's video. And of course, if you're new here, welcome to the channel. We provide the most objective, unbiased, realistic, and accurate TA you'll find on all of YouTube. We give it to you in a nice, condensed, concise, and understandable format to make everyone aware of what's happening in real time in the financial markets. Today, we're going to take a look at Bitcoin and more or less discuss the CPI, what the CPI means, how we actually came to this result, what impact this result will have on the market, and what we can expect Bitcoin to actually do going forward in the next few days, weeks, months, years, whatever. Before we go ahead and do that, head over to the pinned comment down below. Should be the first link. Click the link, join our Telegram, trying to get updates, all our charts, analyses, and much more content there on a daily basis. Of course, go ahead and join up. Let's talk about first and foremost the CPI. Now we'll head over to our Twitter, because we talked about the CPI very briefly over here. We're talking about, if you were wondering why Bitcoin pumped, which was last night, tonight, the easy way to understand it is this. And we'll go through in a bit more detail in a second, but essentially the CPI came in lower. It was 5.8%, which was significantly lower than not only expected, which was 8.7, but last month, which was 9.1%. So we had this drop in the CPI, and that basically indicates that inflation has dropped. And when inflation drops, we have something called systematic risk, and we'll talk about that in a second. But the perceived systematic risk has decreased as people expect the interest rates to rise or drop in accordance with what inflation is doing. Because in essence, interest rates are a tool to combat inflation. Therefore, if interest rates are at 0.75 and inflation is dropping, it indicates that there's no need to bring that any higher than it has been, and therefore perceived future systematic risk has dropped, and financial markets front run that, and therefore the dollar has dropped as the dollar loses strength and money flows back into these risk assets, pumping up the price of Bitcoin, the SPX, whatever risk asset class you're looking at. They've generally gone up in price, and that is exactly what we've seen happen in real time. We'll show you a little diagram over here of exactly what that actually is. I think we'll need to go to the DXY for that one. We'll show you the diagram of how that actually plays out in real time. And we've got the diagram up over here. So we can see that, let's go ahead and remove that. We can see that we've had this little messy flow chart over here, but essentially inflation has been increasing, therefore interest rates rise, therefore interest on debt rises, available household cash flow decreases, cost of goods rise, retail usually sells their assets as they need more cash flow to repay their debt repayments. So you see asset prices fall as well. Companies start decreasing their asset, they decrease their balance sheets, they want to increase their future cash flow earnings. The debt to service ratios are decreasing, okay, because of the interest repayments on their loans, which they take out loans to acquire assets in low interest periods, increase, they have to pay more money back. Therefore, they start offloading these risk assets to make their company look healthier, better, increase cash flow availability to actually use on those interest repayments. Now this whole situation has reversed, okay? So what we're seeing last night with CPI, we're seeing that situation reverse. We're seeing inflation decrease, therefore the perception that interest rates will rise has now flipped. People perceive that interest rates have either topped or will drop. Therefore, retail in particular look to acquire assets again, move money from cash back into assets. Companies move money from cash back into assets because the market is more favorable for that. So that's a very, very brief explanation. I hope it makes sense. And that is why we saw the DXY significantly tumble, significantly tumbled when we had that release, that news release with the CPI. We saw a very strong negative reaction in the market, nearly a 1.6% drop in the DXY there, all the way from 106 to 104.6. Pretty hefty drop there, which is kind of slowly rebounding now. Let's talk a look at Bitcoin, because Bitcoin is what we're here for at the end of the day. And a lot of people are discussing, that 23.8K level, the level that we've been talking about well before anyone else was even talking about. But essentially that level is that major trigger point for the next move upwards. We've had this massive major zone of resistance support in December 2020. And we're retesting that zone. We've been retesting that zone for quite some time now, with a lot of volatility sprinkled in between. Retested this downward diagonal line, upward trending line. It's been a volatile time. That's definitely one thing we can say. But we do know, however, that we are entering a low area of historical trading resistance. And what that means is we don't really need that much volume to push through this range. As we can see, the VRPV indicates this historical price action within this range, within this price range, is very, very, very low. So it's a low resistance range. We just need a tiny bit of volume. We'll slide right through it, right up to 26.5 to 28K, relatively easy. Now, what we do need to do before we can confirm the fact that this support resistance zone has flipped is we do need not only a daily close, which we've got now, we need an open plus close, because a daily close signifies that the resistance has broken, but the daily open plus close signifies that that support, that resistance, has now flipped and confirmed to be support. Okay, so we're currently pushing through this resistance range right over here, which is a tick, which is a good thing, but it's not confirmation we've flipped this zone until this current candle closes above this zone. Okay, so until then, this could still reverse and come back down, so still be aware of that. I wouldn't be looking to aggressively enter the market until that occurs. Obviously, if you've been following me, you already know that we called the bottom perfectly, we called the top perfectly, we accumulated in this zone down over here. We're up a significant amount. So congratulations to everyone who trusted in our analysis, who followed us. It's been a hell of a ride. A lot of people went against us, a lot of people disagreed. I copped hate from every left, right, and center, but we've stuck to the reality, stuck to what the charts were saying, listened to what we believe was correct, and at the end of the day, we came out on top. So it's awesome to see. Going forward from here, guys, we do have our macro over here. We can see that Bitcoin is starting to look healthy again. We had this little bit of rough patch. Everyone's getting a little bit speculative. And like we said in our yesterday's video, was this sell-off was nothing more than people de-risking before CPI. People generally tend to de-risk before economic news, because at the end of the day, no one really knows what's going on. No one really knows what economic news is going to be. It is a gamble whether you're in shorts or longs, or whether you've got positions that are, at tight margins beforehand going into this economic news, just because history has shown that, economic news has resulted in quite a large amount of volatility in the market. So a lot of people de-risked, a lot of people exited. It came down a little bit, caused a lot of panic in the market. Didn't lose this major support zone though. We're still stuck in there and we've pushed back up. Overall, it is looking healthy again. I can bring up a whole range of indicators to show you, but essentially if you're new to the channel, this is a chart we use to predict not only the top perfectly, but also we predicted the bottom perfectly. We're talking perfectly, we're talking months in ahead of time. We're talking months ahead of time, way before anyone else. It is an exceptional chart. I highly recommend everyone who is watching this video have this chart down, lock it down, draw it up. It's a log scale. It is incredibly handy. Not only does it show you major diagonal zones on the larger time frame, it shows you major horizontal zones. And I only got one of them locked in over here, as you can see, but you can go ahead and input other horizontal levels in if you want. But this is the current major horizontal zone we are currently struggling with. The next one would be up at around 28,000. I can go ahead and lock it in somewhere around over here, which is this retest that we had in June 2021. Let's talk about, the macro, because at the moment, the short term is very, very obvious. We're just going to fluctuate until we get that daily close and open. Real quickly, if we do fail to hold this zone here, we will come back down to retest this trend line. Simple as that. That would be a perfect buying opportunity. We can already see 21,000, really, really high trading volume, historic trading volume range over there. Perfect opportunity to re-enter or accumulate if you haven't done already, provided we actually do drop down. That would be the next best spot. Let's go ahead and zoom out, because a lot of people are thinking, whoa, CPI came up positive, interest rates are down, or potentially going down, inflation's down. Is this the bull market? Is the bull market back? Are we back in a bull market? Is everything green light, so we're going to make $1 billion? The answer to that, real simply, is no, not yet. Don't let emotions impact you. Don't let yesterday determine what today is going to occur. You have to be aware of all possibilities and analyze a chart for what it is. What does the chart say right now? Well, very simply, the chart says we are still in a macro downtrend, okay? We are still in the exact same macro downtrend we have been in for the last 9 months or however long it's been. The exact same bear market. Until we break that bear market, we are not bullish. Okay, we are not macro bullish. We have been short-term bullish, okay, since the bottom. We have expected the bottom since here, since the bottom. And the bottom occurs in the bear market. And that means, yes, there is a certain point in the bear market where the price will reach a low and never go back to that level. But that doesn't necessarily mean we are macro bullish, because the price could still move sideways and slightly upwards for an extended period of time. Now, just because we aren't macro bullish, it doesn't mean it's a good time to buy. It doesn't mean it's not a good time to buy. You should be buying when the charts indicate the risk return is favorable. And the reality is the risk return was incredibly favorable down at this level. Okay, with very minimal risk, a few percent risk for potentially, thousands, hundreds of percent profit. Okay, the risk return was favorable. So looking at this, what would actually need to occur for us to enter a new uptrend or a macro uptrend? We would need to break through this resistance level here. That is currently sitting around $28,000. The next major resistance we will retest will be 32, and the major bull market trigger will be sitting up here at 48,000. Break over $48,000, we are going to a new all-time high. I've been saying this for a very long time. I've been saying that since we were even over here. If we break past 48,000, well, not here, sorry, over here, we called that as a fake out. If we break past $48,000, we will go to a new all-time high, okay? I'm saying that on this channel right now. If we break past 48K, we go to a new all-time high. Now, I'm not talking about like a 5-minute candle over 48K. I'm talking about a weekly candle. This is a macro chart. A weekly candle over $48,000, we should go to a new all-time high before we create a new low, okay? And very well, right now, the probability that we create a new low is very slim. It's significantly decreasing day in, day out. The economic data is now supporting my hypothesis and my prediction, which was the bottom was 18,000, and we will continue upwards. Now, don't get overconfident. Don't get too emotional. It doesn't mean we're just going to do this. All right, this has never been on the cards. The most likely reality is that we move sideways. We probably go here, maybe come back down, mess around in this zone, maybe break out around October. Okay, but time will tell. It doesn't really matter. What matters is the fact that we have hit the bottom. We've bounced on the bottom. We've gone up 40%, 45%, whatever it is. We look for new accumulation zones, and we continue on our way upwards. Okay, guys, that is it for today's video. I'm going to leave it there. Actually, you know what? No, I'm not. I'm going to go through one more thing because I guess this is really important. And I want to talk about, or kind of link in what we were talking about before with systematic risk. And the reason why this is important is because I mentioned at the start of the video on our Twitter post that, where is it? Perceived systematic risk decreased as people expected rates to not rise any further or drop. Okay, so what is systematic risk? Because a lot of people might be new here. Systematic risk, in essence, is risk factors that can influence your risk or profit in a market, your return in a market, that are out of your control. So we got inflation, interest rates, governmental policies, monetary policies, taxation policies, all those kind of things that can influence your profitability in a market that you can't control. These are just things that happen, okay? You have other risks that you can control, but these are risks that you generally can't control. Other risks that you can control is, how much money you're investing, capital, stock losses, percentage of portfolio allocation over different assets, it's a diversification, all that kind of stuff, okay? But systematic risk you can't control. So now when systematic risk is perceived to decrease, okay, decrease, the beta decreases. So we get this movement upwards over here. This is systematic risk, right? Moves upwards, the return on the investments increase in comparison to the risk. When the return on the investments increase in comparison to the risk, money flows back that way. And that is what we're seeing, okay? Now you're wondering, the stocks and crypto are correlated. They are correlated to a 0.7 degree correlation, not a perfect correlation. They are correlated. The reason why they're correlated is because they don't move based on each other. They both move based on systematic risk. If perceived systematic risk is decreasing, okay, both crypto and stocks will move upwards. If actual systematic risk decreases, both crypto and stocks will move upwards. If actual systematic risk and perceived systematic risk decrease, we see a significant rally in the market. Now that won't happen for quite some time. That being said, guys, I'm gonna leave it there. Head over to Bitget, join up via my referral link. Telegram, of course, if you're interested in a VIP, you can find all information in our Telegram channel. You guys, a whole variety of different calls, trade signals. I think we've done 14 trades this month already. I think we've only lost 2 and we're up over 1,000% profit, which is insane. With that being said, guys, I'll see you tomorrow. Cheers. Okay, guys, we're going to be taking a quick look at Bitget, and now Bitget is where I personally trade. I highly recommend signing up to Bitget with the link down below. Bitget is probably the best exchange out there if you're a trader. It has a variety of features, and the best things about Bitget are a few things. Number one, it's non-KYC. Well, KYC is completely optional on Bitget. Now, there's a whole variety of exchanges out there nowadays that have gone completely centralized, sharing your personal trading information and information of decentralized governments and different governing bodies. Bitget allows that option to be left to the individual, to the user of the exchange. You can decide to non-KYC, you can decide to KYC. It's completely your choice. Another really beneficial thing about Bitget, and the biggest reasons why I'm sitting here actually recommending Bitget to all my followers, is that it has 0.02% trading fees. All right, this is significantly lower than any other cryptocurrency trading exchange out there. FTX, Binance, could name a bunch more, KuCoin. It is significantly lower, by 500% lower than the lowest exchange out there, Binance. Another big thing, guys, is there's no global restrictions on who can use Bitget. Anyone from anywhere can sign up to Bitget and get access to the entire exchange of all the tools, whether it be futures or spot. No matter which country you're in, you can use futures and spot. If you're in America, for say, and you want to get access to more spot trading pairs, such as Binance Global, and you can't sign up, well, guess what? They've got 250 different spot trading pairs here on Bitget to get access to, and you can get access to all of these. If you're in Australia and you want to access the futures market and you can't trade futures, you can do it here on Bitget. You can get access to the future market and start trading with leverage. And finally, guys, if you do want to sign up to Bitget, go ahead, click that link down below to sign up to Bitget, and you'll get access to the reward center over here, which enables up to $4,000 in rewards by completing 5 tasks. All right, guys, we'll get back to the video. Thanks for listening to that. Okay, guys, I want to take a quick moment to introduce the Become a Trader course at the end of this video. This course was designed by myself and Wolves of Crypto. We put together a whole variety of knowledge to create the most cohesive, understandable, and beneficial trading course there is on the market. If you're interested in learning how to become a trader, if you're interested in learning how to use technical analysis, if you're interested in learning how to apply market analysis to different cryptocurrencies, this is a course for you. We teach you everything from the fundamentals, the basics about what cryptocurrency is, how to trade cryptocurrency, mastering the craft of cryptocurrency, diving into a whole range of technical indicators, market structures, and teaching you how to utilize these when finding trades and applying risk management strategies to become more profitable over time. We even dive into market psychology, human psychology, and provide a variety of different videos and educational content, including courses and quizzes to assist your learning along the way. If this is something you're interested in, guys, go ahead and contact us down below at the cryptoacademycourses@gmail.com. We'll send you an email back with all the course information, the structure, the payment details, and everything else you need to know. That being said, guys, I hope you enjoyed the video today, and we'll catch you in the next one.